Good morning, good afternoon, good evening, folks. This is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our weekly masterclass. In today's segment, we are going to talk about the masterclass about US NFP. So welcome once again to this particular webinar and this particular opportunity where you can really understand how to trade the US NFP, and more importantly, you can get your questions answered. Now, before I continue any further, please say yes or no if you guys can hear me and if you can see my screen. Wonderful, great. So I'm receiving a lot of responses. So all of you guys can hear my screen and you can hear me. That is very good to know. So a little bit about myself, folks. I work as a chief market analyst at AvaTrade. I come from an institutional background where I have worked as over 10 years as a hedge fund trader for Bank of New York Mellon and Bank of America. My wealth of trading within the institutional side is pretty much focused on equities, Forex, and hedge funds. And at AvaTrade, I had the research department, and all the research that you read or listen or you look at in terms of the YouTube video is primarily done by myself. So that's a bit about myself. And now let's turn the tables around and let me ask you a series of 3 questions. And the first question is that going to be, as always, please let me know if you guys have been trading under a year. So you can say yes or no. Ulu, sure, we can do that, no problem. Okay, now please say yes or no if you have been trading over 2 years. Okay, so I see there is vast majority of people over here who are what we classify them as new to intermediate level of knowledge. I mean, that's what they kind of hold. Okay, so which is good to know, because now I can really let's say that tailor my webinar according to you guys and according to your understanding. So I won't use too much of technical terms or difficult jargons, so it will really help you to understand what exactly is going on with the markets. And there was also a question over here that, can you help me to become a better trader? You know, the best advice, and let's just say that is an advice that I can give to you guys, is, folks, try on the demo account first. Only start trading on the cash account when you guys are absolutely certain about trading, when you guys are absolutely confident about your strategy. Then start putting your real money behind it and have a good track record of those winning trades, and in terms of producing positive yield for the portfolio before you start trading and deploying your actual capital. That is the best advice that I can really give you. And if you can understand the importance of that, you will never ever blow your capital. I can guarantee you pretty much on that. Now let's continue with our presentation, and as always, before we do anything, it is important for me to go through this slide of disclaimers and risk warnings. Anything which will be discussed in this particular seminar or webinar cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, the next slide, the first and the most important element for you guys is to understand that when you are trading Forex and commodities, and when you see those big moves, and one of that we will see it today, and we will look at that in just under, let's say, 10 minutes or so, is when the market news comes in, there's a huge momentum to the upside or to the downside. And before you guys will hear anything on a major tier one television, the news would have already happened. You wouldn't really have, it'd be too late for you. So what do you do under those circumstances is that you register yourself on Twitter. You follow good accounts which give you good information. You interact with the people who can answer your questions. This is why I cannot stress enough the importance of Twitter, of you guys being on Twitter. The account details for myself is right in front of you, which is Naeem Assam 23. And of course, for AvaTrade, it is right there as well. I will show you both of these accounts and I will show you how to follow them. But as always, it is very, very important for you guys, because if you are on Twitter, you are trading Forex and commodities, you see a sudden move, through Twitter, you'll get a one line straight on your mobile notifications or on your computer, which will make you understand why that particular move has happened and what is the reason behind that. So that is why it's quite important for you guys to really be on Twitter and then interact. And I always welcome questions on Twitter or interaction with them. In terms of a YouTube, we produce our daily videos on YouTube as well. So now let's go and have a look at all of that before we continue any further, so that you guys can really understand, because under 7 minutes, we are going to move on to something really big, which is quite an important one. And we kind of really got to keep an eye on that one. So this is my Twitter account, as you can see over here. So as always, please, feel free to ask me any questions in relation to that. I'll be very happy. All the major tweets, all the major price actions, you can see, like, technical analysis and everything else. It goes over here, and of course the fundamentals, so you can really go and see that. Similarly, when you follow AvaTrade, please make sure that you are following the right account with a tick, because we are verified on Twitter. So it is quite an important one for you guys to really sort of understand that. Now, the third one, in terms of a YouTube, this is our YouTube channel right over here, AvaTrade. And, over here, you see all the videos on a daily basis that you can really, see them, and then you can just make a sense of that. So that's pretty much it. Now let's go back to our agenda for the day and then see what exactly is there in relation to that. Now, folks, today we are going to discuss the importance of US NFP, why US NFP is so important, what makes the US NFP reading, what instruments to trade, the current state of markets and analysis, defining levels and defining strategies. Now, folks, when we talk about US NFP stands for non-farm payroll. The data comes every first Friday of every month. This particular number has the ability to move the markets enormously. And I mean by that, like Forex markets, commodity markets, stock market, because it tells you what is the unemployment rate over in the United States. In addition to that, it also tells us that how many people over in the United States are employed, or they are not employed, right, or unemployed, in the other words. So the Federal Reserve over in the United States, which control this monetary policy, and the monetary policy really moves the stock market, the forex market, and the currencies, obviously, is very much dependent on the US jobs market, because the Fed wants to know how the US job market is really performing. Now we're gonna just take a little bit of speed a bit higher, so because we're getting close to something very, very important, because at 1:15 today we are going to get the first piece of information with respect to the US NFP. So we will have a look at the markets, we will see where the opportunities are, because this particular number, this is ADP non-farm employment, so private employment change numbers going to come. The expectations are for a jobs in over 500,000 to be created, and last month we had that number over 428. Now anything which is better than the expectations should really move the markets enormously. Now in terms of trade, what instruments can we trade? We can trade the Dow Jones index. There's no doubt about that, because this index is really going to see enormous amount of a movement. We can trade the S&P, we can trade the Nasdaq, we can trade the sterling dollar, we can also trade the euro dollar as well, and we can also trade gold. So these are the sort of instruments that we can really trade. So let's have a quick look in front of ahead of this data. So when we look at gold prices, they're trading at 1884. The low of the day is at 1881. This is where you will see the low when I put my mouse on that. So that's 1881. The high is 1897. Okay, so right now we're trading at 1884. So what I am going to do is, if we break out of the current trading range, then there is a trade. Otherwise, there is no trade for now. For the S&P 500 index, the move, what I really kind of wanted to see is a break above the today's high. It would be very, very nice for me to see. If that happens, then we can take the trade to the downside. But if the market goes below today's low, that would be a trade to the downside. That's what I'm really looking at. In terms of the Dow Jones, what I'm really looking at is exactly the same as the S&P, a move above today's high or a move above today's low. That is where we are focused on with relation to that. Quickly turning on to sterling dollar. What we're looking at in terms of a sterling dollar is a break of the price below the 50-day moving average, a break below the today's low, which is at 1.2750. Again, that is on the downside of what I'm looking at, and if the move happens to the above this one, that is only when I'm going to look out the trade, for another trade for that. For the euro dollar, very quickly, what I'm really looking at is the lows of yesterday and the high of today. These are the levels that we are looking at now, folks. We are getting very, very close to the economic numbers, so it's time for us to get ready to tweet so that you guys can get all that information. So I'm going to start putting that information as we pretty much speak. So give me a second over here, and I'm gonna put out all those important numbers over here, so that you guys get the information, and also we can see the opportunities here. I'm gonna bring out the MT4 platform the Bloomberg's platform for you guys. Over here we are going to see those numbers breaking out, and I'm gonna put the ADP, because there you go, the ADP report is oh god, okay, it's picking up the wrong one. Come on, the number is already out. There you go, 749. Wow, that is a stellar number. That number is much, much stronger than what the market was expecting, because remember, we were looking at 649. So that means the number which we have received now is much stronger than previously anticipated, and that should have a very, very positive response in terms of a stock market. So what I'm going to do is I'm going to send you these tweets. So if you follow us, you will get the notification directly on your phone without any issues, without anything. And then I'm going to do the same over here as well. So I'm going to put the numbers over here, and there you go. Now let's have a quick look at the price and see how the price has performed over this period, and we can see that the number has produced a very, very small color in terms of a price. The market is still very much trading for the S&P, but the for the euro dollar. For the S&P, again, not much move. Traders have completely ignored the slight upward momentum in terms of a market. So the number was quite strong as compared to the market, because remember, the expectations for that particular number, that was 650. We have, the US economy has created over 100,000, nearly more jobs than the expectations. So the number was very, very strong. But what we're seeing in the market is we're seeing no reaction, pretty much. So very, very small reaction to the upside. So in terms of a trading opportunity, we really don't have the trade. The only trade right now which remains is that if the price, comes over here, for instance, if the price comes over here and then it breaks below, if it comes over here, come on, let me just get this. If the price comes right over here, and then it starts to weaken up, so it goes like that, and then it starts to weaken up like this, then it starts to move to the downside. That could be the opportunity. So you can really place your stop losses near that 100-day moving average. This is your 100-day moving average. On your 15-minute time frame, this is your 200, and this is your 15 right over here. So that is really the sort of opportunity that we are looking at in terms of in terms of the Dow Jones, really. But overall, right now we don't really have any opportunity on the back of the this particular data which came out, because it is very, very boring, despite the fact that the US economy has created more better jobs. So the question really is that why have we not seen this important number moving the markets because of the US presidential election? Because remember, last night we had the debate, and that debate told us one particular thing, which is that traders and investors are very much concerned what is going to happen during this US presidential election. If Donald Trump is really going to give up the control of the presidency without any creating further mess, or provided that if he loses that, or if he is not. Now, moving back to our original topic of the US NFP. So the first component which we have seen is already out. As I mentioned, that was your ADP number right over here. We have seen that number, so this number has put a very positive tick. Now we're going to look at the next particular important element of this one, which is going to be tomorrow, releasing at 3 p.m. UK time, and that is your ISM right over here, your ISM manufacturing number. And the expectations are 56 against, which is exactly the same as the last previous reading. So keep an eye on this particular number, because this will be coming out tomorrow as well. And that will be the last sort of information before, excuse me, before we get our final number. And our final number, as I said earlier, it is going to be released on Friday at 1:30 p.m. All of this particular data is going to be very, very important. Average hourly number, non-farm employment. So you see that the market is expecting a lower number as compared to the previous one, because last time what we had was employment change. The economy created 1.3 million jobs, and now we are expecting for these jobs to be just under a million, which is nearly 900,000. And the unemployment rate, we are still expecting it to go down from 8.4. So far we have a strong setup for this particular data right over here, which is your US NFP, and this can really move the market. But I can assure you one particular thing which is pretty much given, but again, there are always exceptions to every single rule. But one thing that is just pretty much given is that this particular number is going to produce a lot more heavy moves for the market, we won't see the same sort of a move in the S&P, the Dow Jones, as they have produced on the back of today's number, because on Friday we are going to expect this market to move quite a lot. Now, in terms of developing the levels of the stock market ahead of this one, what we are really looking at, we're going to look at the Dow Jones, and then we're going to determine the price, where the price is. The first and foremost important is what we are looking at is if we have a 50-day moving average right over here, right? And then we have your 100-day moving average right over here. And remember, this is your daily time frame. And then finally, you have your 200-day moving average. Now, at the beginning of this week, what we experienced was that this particular move to the upside, right? So we saw this really nice rally right over here at the beginning of this week. But then for the last 2 days, we've seen this rally moving to the downside. Now, obviously, when the week started, when it happened was that when the price crossed below this 100-day moving average, and when it usually does, it means sell, and then whenever it crosses above, that means buy. Investors started to buy right around this area when the price crossed above the 100-day moving average, and then they continue to buy. Now, then at this particular junction, right over here, the hopes were that this market will continue its journey to the upside. It will not stop over here. When the market was here, the expectations were that, look, we will continue to move higher, and then we will break above this one. But that is not what we experienced. What we saw was that what we're experiencing now is that the market is really turning back. Now investors are hoping for the price to come back around that 50 near 100-day moving average once again. And if the price fails to break above that, and then they're saying is that, okay, maybe the price comes over here and then it bounces back up again and then break this 50-day moving average, which is right over here. If that happens, that would be very positive. But if that doesn't happen, let's say if the price comes into this support zone right over here, and then it falls below that, then the next area of support that investors and traders are really hoping for is going to be the previous lows. Let me draw them. I didn't really put them right. Okay, I think this particular software, I just really don't really like this pen because you can't really draw the perfect drawing. But it is going to be right over here. So that is the area that investors and traders are very much focused on. So if the price breaks this one and it comes over here, traders and investors will be really hoping for this price to, for the price to bounce from this one. So I'm just going to draw those lines for you guys to make it a little bit more neater and cleaner so that you can see that where those areas are. So let me just bring maybe, okay, so maybe it's just this one. I'll just do this one. And then I will draw another area right over here. So keep an eye on these areas as we go, because this is very important. If the price breaks below this area, like if it comes like that, then the next area of focus is going to be your 100-day moving average, and because that is the only likely scenario for this one. Similarly, when we look at the S&P 500 index, the situation is no different at all. It is exactly pretty much the same for the S&P 500 index. I'm going to just change it to the 100-day daily time frame, so you can see the situation is very same. And again, this particular one, if the price breaks that level, then the next level that we are really going to be focusing on, it is going to be your 200-day moving average right over here. If the price doesn't stop right here, if it fails to do that, and then we are really looking at the next level, which is over here, the previous lows. And if it doesn't stop there, then we are really looking at this area. So these are the sort of areas that we gotta be really careful of. But for now, today's low looks pretty good. It seems like the market is ready to bounce back up. And then if it does, what we wanted to see is the market breaking yesterday's the day before yesterday's high. That this is the level that we kind of really want the market to break to the upside. So that's pretty much with respect to these markets. Now quickly have a look at a gold price, because again, gold is something that you may want to also focus on ahead of this particular number. So what we're looking at in terms of a gold price is holding on to its gain, because it is obviously, you know, above its 100-day moving average. Anything which is above 100-day moving average represents an area of strength, so this is okay. And as long as we stay above this entire area of support, I think it is pretty okay for the market to continue its journey. However, if we break above this area of support, so let me just move this one over here, then the next, you know, the next level of support for the market is really going to be the near 200-day moving average. And that, my friend, is really going to be in the area of 1755 to 1775, which makes absolutely sense. But if the price moves from its current areas, then the next level of resistance where you perhaps wanted to take some profit is just going to be before this 50-day moving average, because that's where we are expecting for the price to hesitate. So keep an eye on that as well. Now, folks, as we go along, you know, feel free to ask as many questions as you can, because we don't really have much time left, but I'll be very, very happy to answer any questions that you have so far. Hi, Kuldeep. Yes, it will be on YouTube channel, so don't worry about that. Trevor, I'm referring to support and resistance zone and the potential, which are also known as, you know, potentials, buy and sell zones. Okay, oil. Okay, so someone just said that please cover oil. I will have a look at oil prices now. Okay, so oil, in terms of oil prices, what we're really looking at is that, you know, that the price has completely lost its momentum altogether. Now, what do I mean by that? So when we look at the daily chart, what we really focus on the daily chart is, again, you know, our important moving averages on your daily time frame, and that is your 200, 150. Now, the fact that the price over here, right around this area, you know, it had a lot of battle. It was trying to stay above this trend line, right? So it was, sorry, let me just draw that trend line a little bit again, because that trend line is very, very terrible. The way that it just, this pen does, it's not really the greatest pen, but we got to deal with it. So this is the trend line, right? So the price has pretty much broken below this trend line. And in addition to that, what we have also seen is the price trading below the 100-day moving average. So what we got to look at in terms of a price is, okay, where the next level of support is. The next level of support is going to be where your 200-day moving average is going to be. And for me, you see, this is just so bad. Sorry, apologies. So this is going to be right over here, and the other one is going to be just right over here too. So that is the area that I'm expecting for this price to really continue and move to move to the downside. So that is what I'm really kind of expecting it. However, if the price reverses its move to the upside and it moves above the 100-day moving average, then really all bets will be off. Then what we are really looking at is the top of this consolidation on this chart, and that is a potential area where we can see some sort of a resistance coming in, and that resistance area is right in this point with it's 43 to 43.90. So right now the focus is right over here in this area. See how the price continue to perform, the chances are, once again, to recap, for the price to move its journey to the downside. So let me see if there are any more questions over here. Okay, so why the US election influenced the stock market? I've answered that. So go back to the recording on YouTube, you will see that. Kuldeep, forget about Fibonacci's and all of that. Try to learn the price and the price analysis only, because you see that what you have done is that I haven't used any of the indicators. I've just completely done the price analysis. That's the most important one. So Amir, I've done oil, so hopefully that answers your question. So I suppose this is a pretty much folks from our side, and once again, it is important for you guys to be on Twitter. So please carry on following, carry on interacting, ask as many questions as you want over there, and I'll be very happy and pleased to answer your questions. That's all for today, and I'll see you guys next time.